Take a look at the dollar, and this is exactly what I thought was going to happen here when we just looked at that previous chart where we could see the dollar has pulled back off the highs. Let's flip over to the 10-minute chart. Wow. Holy cow. Look at this. So again, the dollar initially, huge pop, but look, the dollar's actually gone negative. So basically, as a technician now, we have to figure out why is the market discounting this level or this jobs claim, job unemployment number? Is there some alternating data that's coming through? Are the underlying factors? And these are things that, again, as a technician, we have to look into. We have to find out, okay, well, why were the jobs so strong? Maybe it was because the government did all the hiring. Maybe there's weakness in most sectors, but it's one sector that is abnormal because of some factor. And ultimately, what this is telling me is that the market is telling us that the jobs number, yes, it was stronger, but it's stronger for a specific reason that the market does not believe will last. And that, again, that's me reading the charts. That's just what the charts are telling. The charts are the ones that are right. Doesn't matter that the number was better than expected. It's what does the market react to? And that's what, again, throughout the course of the day, we need to watch the market. Where does it end today? And ultimately then extrapolate what the market is telling us, not what we're telling it based on what we're seeing, right? The market, again, is always right. Not me, not anyone else. Okay, so I want to just show you something really cool here on the chart, guys. So if we go back to this chart, daily chart of the US dollar, I want to just do something with you guys, a little bit of a kind of an experiment here. And so what I want to do is, if we zoom out on this dollar chart, and I'm actually going to erase these trend lines. Let's get rid of all our trend lines here so it's just a clean chart. We basically had a pivot high on the dollar back here, right? We then had a secondary pivot right here. Now, what's interesting, if we look at that secondary pivot, right, and we do a Fibonacci from that high, so from this high to the lowest point down here on the dollar, how much of a Fibonacci retrace was this? Let's do it right now, okay? So let's stretch that, and notice the lowest line is going back down to the exact low, and isn't that cool? Look at this. So basically, if you take your highest point to your lowest point, the retrace on the dollar right here is exactly at the 50% retrace trend line on the fibs. Now, what I do here is I start to extrapolate this out. And by the way, this doesn't guarantee me a win or a being right. It's just these are the experiments that I do. As a technician, I'm doing multiple things and trying to see how many factors I can get at a specific level. The more factors, meaning, you know, a bull flag, a bear flag, a topping tail, a bottoming tail, a fib retrace, a gap fill, whatever it may be. I mean, there's like 50 different factors that could be. But the point being is that what I'm doing here, what I find fascinating is I'm extrapolating out one of these techniques is to say, okay, from this peak, right, from this peak here to this low, this is a 50% retrace. So from this peak, as we are bouncing, what would be a 50% Fibonacci retrace, right? So again, here, just simply let's zoom in, and we'll do from here down to here on the fibs, and that gives us a retrace. Interestingly enough, look at where the 50% is, right here. And look at that, right there. Okay, so does it guarantee that the dollar would go there? No, but if you have a congruence or a confluence of factors, it gives you maybe a slight edge of where if the dollar goes, it may run out of steam per the last one. So you guys see how I'm using a last move and the kind of the symmetry, if you will, of a last move in the retrace to maybe help me predict where it could go. And again, the biggest thing, and this is something that so many people don't understand out there, is that there's no guarantees that that's what happens. That's not the point. The point, again, is to try to find a confluence of factors that at least gives me an edge. And that's all a trader can ask for. That's all an investor can ask for is an edge. All right, that's it. That's it. It doesn't guarantee being right. It's about getting an edge. And so I'm just showing you essentially one of the things that I use to help me predict. And I really am looking and saying, oh, okay, well, at least that's at that level. So that's 2 factors. I like 3 factors. 3 factors, and that's in my methodology, the Winning Trader series, that's exactly what I'm looking for. You get 3 factors, you should get your probabilities up to about 70% success rate. Now, you have to be okay with there being very few trades. I'm okay with that. I've been trading for 24 years. I don't need 1,000,000 trades a day. You give me 1 good day trade a day, I'm happy. You give me even 1 swing trade a week, I am happy on that front. Apple. So Apple has rallied already back. This is driving me crazy. So pre-market, I had an order out to buy Apple at 179.97. All right. When the jobs number hit, the stock came down to 180.10. I missed getting filled by 13 cents on a nice chunk of change. Now you might say, well, why were you looking to buy Apple today? Very simply put, you have the daily 200 moving average right here at that exact level. You also have a myriad of selling pressure that's knocked Apple down. It's now oversold. And again, we've talked about this before, but you have levels right in here that, again, give us a general consensus. Now, there is a trend line down here that would be my secondary ad level if needed. But today, it's a shame that that didn't get hit. I would have liked to have gotten filled on that trade this morning pre-market. All right. Couple other charts I want to go over. We should look at Tesla here. Tesla, I know, is a favorite. It's a fan favorite out there, so let's take a look. I think it's so cool to see these levels here, guys. Again, look at how the trend lines really do help predict where price is going to stall out. And you can see we literally went up to that level, and then we've had 1, 2, 3, 4, 5 down days in a row on Tesla. What I want to show you, too, though, is that, again, remember the confluence of factors. So what else can we find here? And what we can do is if we zoom out on the chart, we can take a trend line and we can absolutely drag it down here and look at this. Now that is cool, right? So you guys see what I'm saying? So you have this line here, right? And it goes right there. And then you have this secondary line right here and it goes right there. When I talk about a confluence of levels, these two lines literally meet right there. What that does is, does it guarantee me a win on a short here? No, not at all. But what it does do is it raises the probability that I will be right. The more factors at the same point of contact, the more the odds of you winning on your trade go up. It's very simple. I mean, it's really about stacking the odds in your favor, literally by stacking the factors.